Top 5 weakest banks in Ethiopia, deep dive analysis. Ethiopia's banking sector is at a turning point. While some banks are modernizing and expanding, others are shrinking, stagnating, or simply not keeping up. Today, we're revealing the 5 weakest banks in Ethiopia, based not on rumors, but on data. We'll uncover why they're falling behind in tech, customer trust, diaspora relevance, and international banking standards. With over 30 commercial banks and billions in deposits, Ethiopia's banking industry is more competitive than ever. The National Bank of Ethiopia is tightening regulations, fintech is disrupting old models, and diaspora customers expect global-level service. So, what happens to banks that can't evolve? They fade, slowly, or suddenly. Let's look at 5 banks whose weaknesses are becoming more visible in 2024. Bank number 1, Development Bank of Ethiopia. Once a pillar for national development projects, DB is now one of Ethiopia's most financially unstable banks. As of recent audits, its non-performing loan, NPL, ratio was above 35%, far above the 5% industry benchmark. Projects are often politically assigned and poorly vetted, with minimal repayment success. DB is barred from accepting deposits, relying solely on state capital and donor injections. Key weaknesses: NPLs among the highest in Africa, no retail services, can't attract public deposits, not SWIFT integrated for international transfers, fails IMF lending compliance benchmarks. Global relevance, virtually non-existent, not trusted by private international lenders, no diaspora-facing products, and no correspondent banking relationships. Bank number 2, NIB International Bank. Founded in 1999, NIB once led the private sector. But today, it's heavily criticized for weak digital services, aging infrastructure, and poor customer satisfaction. According to the 2022 Enot Bank review, NIB ranked in the bottom 5 for tech investment, despite rising mobile banking demand. Its online and mobile services suffer outages, and diaspora-focused accounts are minimal. Key weakness is very low fintech investment, weak mobile banking UX/UI, few international correspondent partnerships, failing to attract under 30 demographic. Global relevance, lacks functional diaspora remittance channels, doesn't participate in major digital platforms like Flutterwave, TerraPay, or RIA. Bank number 3, Enot Bank. Enot Bank was launched with a noble mission, empowering women financially. But it remains one of the smallest banks in Ethiopia, with limited capital, under 120 branches, and a poor digital presence. According to NB's 2023 stress test report, Enot ranked low in liquidity ratio and tech innovation scores. While its cause is socially valuable, its operational model isn't competitive. Key weaknesses: small market share, and LT, 2% of total deposits, no active diaspora strategy, minimal investment in mobile or cross-border platforms, limited lending power. Global relevance, no cross-border money services, no partnerships with fintechs like Chipper Cash, and minimal presence in expat markets, for example US, UK, Middle East. Bank number 4, Oromia Bank, formerly Oromia Cooperative Bank. Rebranded in 2021, Oromia Bank inherited a legacy of slow growth and regional limitation. While it has a strong base in Oromia region, its digital rollout lags far behind. According to the 2023 Mobile Banking Adoption Report by Cepheus Capital, Oromia Bank had one of the lowest active mobile banking user rates per customer base. Key weaknesses: delayed core banking upgrades, weak API connectivity with fintechs, patchy ATM and POS coverage, still struggles with rural versus urban service gaps. Global relevance, diaspora-unfriendly platforms, few partnerships with global remittance players, no real-time integration for global fund transfers. Bank number 5, Dabub Global Bank. Dabub Global is a newer entrant, launched in 2012, but still hasn't found its footing. It remains small in asset size, under 15 billion birr in 2023, lacks innovation, and has one of the lowest deposit-to-loan conversion rates among private banks. Public reports show high staff turnover and inconsistent service quality. Most branches are poorly equipped for modern banking. Key weakness is under-resourced branch network, poor visibility in digital banking reports, no known international alliances, no strong brand presence locally or abroad. Global relevance, no swift remittance functionality, few digital payment tools, irrelevant in diaspora remittance space. So, what's the real danger here? These banks aren't just underperforming, they're becoming irrelevant in the eyes of a modern Ethiopia. With rising fintechs, cross-border banking apps, and digital-first competitors like Awash Bank, CBE, and Bank of Abyssinia, the bar has been raised. And these 5 banks, if they don't adapt, could face acquisition, collapse, or permanent irrelevance. Subscribe, and let's build financial awareness together. So, what's the real danger here? These banks aren't just underperforming, they're becoming irrelevant in the eyes of a modern Ethiopia. With rising fintechs, cross-border banking apps, and digital-first competitors like Awash Bank, CBE, and Bank of Abyssinia, the bar has been raised. And these 5 banks, if they don't adapt, could face acquisition, collapse, or permanent irrelevance. Subscribe, and let's build financial awareness together.